Well, cheers to the all reliable FOMC Retrace retail trading team. This is Mastro coming to you from Puppet Master HQ for the first time in a couple weeks, and this is your routine briefing. So I'm going to make sure my sound is all checked. I had my camera on earlier, so I deleted that briefing and put this one up um, just because that was longer than necessary. So um, this one's going to be a little shorter without as much live trading. Okay, very good. Sound is good. Technical difficulties are minimal, and it's good to be here. So we're going to jump right into our warm-up and discuss what is actually a pretty nice looking day. The first thing that I want to just bring to your attention is something called the 80% rule. So I'm going to switch screens here, share with you what that means, and we'll be looking for it. It seems that the algos are front running it. Uh, my opinion, well, not my opinion, it at least for my indicators, it doesn't confirm until 11. And so we're going to switch screens here real quick, and I will show you what's going on. So, what is the 80% rule? Minus the lovely toucan Spanish aid here. So I'm going to click on this. If we can't get a pretty display of it. So this is on shadowtrader.net. Really nothing too fancy. This is just the full explanation if anybody wants to go check out what I'm talking about. But basically, if the market opens up outside the prior session value area, which is what we did, and then we trade into it again for 2 consecutive 30-minute periods, there's an 80% chance we're going to rotate to the other side. So before jumping to the warm-up, in case this does confirm, which it should confirm within the next 4 minutes, I'm going to show you what I'm looking at there. So I'm going to use the TPO. Some of you may have different value areas. I do use this one for that 80% rule. So what happened is we popped into the lower edge there at about 11, and we closed the first 30-minute period above 40.11 at 10 a.m. So 10 a.m.'s close was 40.13. And this close for this current 30-minute period is obviously going to be, it seems, a little higher. And so what that implies is that we're probably going to go, we have an 80% chance of going to test the top of yesterday's value, which I have at about that 40.60-ish area. So the way I'm going to play it when it confirms, I'm going to take a long, give it some room, and let it ride. So it's going to be a bit of a different trade other than Faye or Barb or any of our lovely automatic trades. And the reason for that is these 80% rules do not occur too often, and when they do, it's nice to take advantage of them. Excuse me here as I adjust my lighting. My friend OJ has been telling me that I have too much shadow going on here, so I will work to fix that. If anybody has any lighting tips, that would be great if you want to hit me up in the comment section of this video and let me know what I'm doing wrong, because I've done all the Googling and seems I still have shadow despite having two cute little studio lights here. But we're not going to dwell on that too long. I can deal with that outside of market hours, so just excuse the shadow, as apparently that is an eyesore for some of my esteemed yet pickier viewers. All one of them. In any case, jumping into the actual warm-up, we'll come back to this TPO when we want to review just some of the MGI, which means market-generated information. Let's jump into the warm-up itself. Overnight inventory, which is super interesting here, it kind of showing the bullishness of this market. And I was originally looking for a short. I haven't placed any trades yet because I was looking for the short and never got the signal. But you can see we have that 100% net long overnight inventory. It is up, and it is the 23rd, not the 22nd, so I'm going to update that here real quick. So we haven't seen that unwind, and in fact, as I just mentioned, in about a minute, in fact, I'm just going to go ahead and get the trade going here, kind of looking for that potential move toward the upper side of that value area. So just going to go ahead and get involved here, and I am going to give this a good amount of space. Let me just get my stops adjusted here, and we'll see what happens. So this is one of the few times I will use a target, but the thing is 40-30 entry, I'm going to get trailed out with 30% of profits secured at about 10.67 points today, as you can see on the document here. So yeah, so I'm definitely looking for that long with that 80% rule. If you want to wait perhaps until we get up there, I think it'll be a nice little fake break trade, and we will go from there. So back to the warm up here, just kind of confirming that bullish bias was that open test drive. You didn't see the unwind of that 100% net long overnight inventory, so it really looks like they do want to retrace the entirety of that Fed move, which they are pretty close to doing already. So we'll just kind of watch those important areas. Yet, like I said, the 80% rule does not happen a lot, and when it does, it is a nice thing to take advantage of. So we'll see how it goes. I'm just going to kind of let that work in the background. It's already working nicely. Um, so yeah, I'm not going to give it all the way to the other side necessarily. So like I said, I'm my entry is slightly different as I am. This is a breakout trade, and I do usually like to fade the edges outside of barb, obviously. Yeah, for this 80% rule, I'm going for that breakout entry. Yet I will get that trailing stop come in at 10.67 to protect 30% of profits. So we'll see what happens there. Looking good already, and we'll see if they continue to break out. This double distribution, I'm going to also show you again in the TPO. Again, lending to that bullish assumption. I came into today expecting a little bit of bearish follow through, yet we're just not seeing that. And so we just got to respect everything that the warm's telling us, and it's pretty clear today. It's quite bullish. And assuming we don't get a magical and rapid retrace soon, I think that 100% net long trade, which is often a good short, is going to be negated, we'll say, for the day, just because of everything else that we got going on. So this warm-up document is available in the description of this video, and you can access other resources there as well. So this is kind of just what we're looking at here. That is the warm-up, and it is convincingly bullish, especially with his confirmation of the 80% rule. So we'll see what happens. I mean, we have everybody and their mother seems to be long right now. We're all seeing the same picture. People much more sophisticated and intelligent than I am are seeing the same picture. So if they do start to unwind it, in my opinion, it actually lends to the possibility of a big unwind. So we're either looking for the success of the 80% rule, but if we do fall into that 20% of occurrences, we could see a decent run lower. So just keep your stops tight, stay nimble. I mean, obviously not trading advice, but you know what I'm saying. So moving on from the warm up, we're going to pop into first the macro look, and then we'll get to that nice TPO. So I have a SPY going on here. I'm going to detach. It is delayed data just because Sierra chart does not include in my 3 data packages SPY, and I'm not going to pay a bunch extra per month for something that's just purely structural. I don't know if it's a bunch, but not going to pay anything extra per month for something that's purely structural because we can see everything we need to see on this macro chart. So just point that out. This price is obviously different than the current spot price, 10-minute delay. So in any case, this is our SPY chart. So we did pop. So yesterday, this line here was a gap, which we popped down and filled. I'm trying to find where that gap was. Because that's why I had it marked. Ah, yes. So you had that gap from 17th-ish. Not exactly sure. So we came back, filled that yesterday, popping back up so we can get this off the chart, first of all. And now we're kind of moving toward this descending trend line here. We're obviously above the one of those major trend lines, and we're obviously below the descending trend line, or I guess it's ascending from the October 13th low. So watching what happens today as we go confront that high again, we confront that trend line. It is at about, let me get my tools value window up here. It is at about, for today, well, conveniently we're at that SPY 400 price. So looks like we have another date with SPY 400, assuming the 80% rule stays intact, and we will see what happens. So SPY is currently at, just give the correct spot price because we have moved a lot in the past 10 minutes. SPY is currently at 398, so we'll see what happens in another dollar if and when we do get there. And again, top of value about 25-ish points higher on the ES, and we'll see what happens when we get there, if and when. I'm sure I cheered you properly, but there's a cheers. I was just so excited to run my mouth. And moving on from SPY, or I guess we'll just a couple other things I want to look at here. Obviously, we got a nice little bounce off that 200 SMA to begin the day. We're now above the 100 SMA, 365-day VWAP, and moving toward that trend line again there. So macro look to me still supports that breakout toward the prior day value area high, and we will see if that holds. And again, that really the major level here today is going to be that descending trend line from the February high, and if we do go a little lower, the 200 SMA. So that's what I'm looking at on Mr. SPY, and moving toward I think we go to, yeah, let's jump into the TPO. So there's that double distribution getting confirmed. Remember that the predominant markers of a double distribution type look are singles as price moves into a new area of balance. So yesterday's balance area, we then saw that consolidation at about 9 between, let's say, 10 o'clock, and when we had this nice little breakout here, you saw that consolidation and as we moved into yesterday's value, and now you're seeing the continuation, and that is that double distribution type look. The major levels to watch for this are going to be, I'm just going to zoom in a little bit here so you can see it more clearly, about 40.20, and if we do get that sell-off, watch what happens about 4008. That warm-up document has the barb levels, one of which is that 4008. So these are kind of our pivots for the day. We just popped and tested the naked POC from yesterday, which is kind of why we slowed down again. I'm expecting that move up to the top of um, yesterday's value area. I'm going to keep saying that at least one or two more times in the briefing because this is one of those examples of 80% rule that you don't often see. You don't often get this. It's a very clear, nice, 80% of the time successful trade. And so yeah, so you're seeing the kind of the first hurdle here will be that POC, and once we start to release a little bit, we'll move toward at least 50, because remember, psychologically important 50 level, and then again toward that value area high. So besides that on the TPO, if we do get that reversal, obviously we're looking at that 39.90 area, that first naked POC, and then the overnight low. Um, Really, if they do release it way higher and really continue this breakout, maybe we'll go after that single. Maybe we'll make a higher high. It's possible. I wouldn't be surprised yet. I think that lends to a nice fake break trade up there once we pop it. So that's what I'm seeing on the TPO side. Let me see. Just one more thing. I mean, I hate to bully somebody who's already been beaten up, but let's look at volatility here. Let's see if I can move the window. Yeah, volatility has broken kind of that important 2240 support. We're now a little bit below it. I guess we'll draw. I'm going to get rid of this horizontal. We're going to move it down just to clean this up a little bit. We're just in a new consolidation pattern, really breaking lower in my opinion. I think volatility is going to continue descending. The VIX, I believe, is going to be below 20. Oh, nope, it's almost right at 20 again. So hovering around that all-important 20 level, I've been saying, like a broken record. If we're above the trend line, that downward sloping trend line and upward sloping, really, we're kind of in what I see as that bull posture. So right now we're between. I'm going to go back to macro here. Just to show you what I'm talking about, we're between that ascending from the October 13th low and descending from the high, and so we're kind of in this no man's land, kind of that day by day, excuse me, that day by day approach, and we're just going to be watching what happens with volatility. I'm forced, despite my bearish inclinations, to assume a neutral to bullish stance above that descending trend line here, especially with that nice little fake break we got, I don't know, March 11th or whenever that was, especially as volatility continues to go toward 20 and descend. Not really trying to crystal ball it, even though that seems like we're doing sometimes here at these briefings. Just you have to respect, I think, what volatility is telling you relative to price action. So that is all I have to say about volatility there. So just to pop back to our TPO, because I think this is the important chart of the day. I'm going to just put this up here in case anybody wants to get a better look at it. I'm going to release a newsletter pretty quickly after this video, so that's all I have for the routine briefing itself. I will be here again tomorrow, and we'll be on time at 10:30. And then Monday I'll still try to be on time, but I'm going to have to go back to the mobile office, so we'll see what happens there. Anybody who wants to listen to some cool electronic music. I'm going on Twitch right after this. 12 o'clock, I'm going to start playing that. So if you like those rough transitions, we're going to get a nice little DJ set today. Otherwise, I will be just hanging out there, streaming the live trades as we watch what happens as we move toward this value area high. So besides that, as always, feel free to tweet Routine Trader with your thoughts, with any lighting recommendations to get rid of this lovely shadow that I'm seeing out of the corner of my eye. And you can also respond to any newsletter if you are a subscriber, and if you're not, it'd be really swell if you would go ahead and hit that subscribe button by going to retailtrading.com right in the description there. And besides that, obviously comments in the comment section of this video. And if you did enjoy today's content, nice and upbeat, finally wearing the proper uniform, I'd appreciate, which is obviously the tie. I'd appreciate that like. Yeah, that's all I have for you. I'm going to continue to monitor this trade and watch for that move to the value area high, once again near that 40-60 area, and we'll see what happens. So thank you for watching, and stay classy until we talk again.